It is just after 3 p.m., 3:21 p.m. Eastern Time on the 22nd. Sorry for the late start. Just had a meeting run long, and I just shared that in Discord and Telegram. So I have something really exciting next week. I'll be in a roundtable with several others, including myself. It will be Roger Scott, Nate Tucci, Kane Shea, Graham Lidman, and Jeffrey Turnmeyer, and probably Jeff Smith, and maybe uh, Jamie Delagouche, who I had in my final hour session last week or a couple weeks ago. So anyway, a lot of fun next week on Wednesday, and I will be showcasing my new pinch point scanner, which is 10,000 plus instruments that I have live data feeds for, and looking to find what is tradable, what is actionable, and I'll show you a little bit of that today. So you're also welcome to join me in the roundtable next week. I should be Wednesday, Wednesday the 28th. Yep. So Wednesday the 28th, if you're in my Discord channel, in my Telegram channel, you'll see links that go out. So make sure you check that out. Recordings will be available, but don't want to miss it live. If you can make it, that'd be great to have you. So what's up with today? Bulls versus Bears. Look, we just had a Moody's downgrade. We had a failed bond auction here yesterday. We're trying to get this tax bill passed. I think the House passed the tax bill 215 to 214. So just by a whisker. And now it's in the House of the Senate. So I'm curious what that looks like. And that's why the market's still at a standstill. We are at some key support levels that were actually broken a little bit yesterday, and they still remain. So these blue lines represented some trades that took this morning. We had some daily profit plays that did pretty well. We ended up doing a broken wing butterfly call spread, took about 80% of the credit, did a bear call spread that also did very well. Either traders got in for 50 cents with me or got in for $1 to $1.50 from the original trade of 59.05 to 59.20. And you're probably looking at, 80, 85, 90 plus percent of that max credit. That would have been, over 2 hours ago now, but still looking good for the end of the day. So anyway, I'll go ahead and get rid of these lines here. Let's talk where we are at for the end of the week. Well, if we don't break the high and we don't break the low, I do wonder if this market from this high to this low is just not going to break. I mean, I was watching intraday price action yesterday, and in my live sessions, I was talking about this 5,900 handle. We broke 59, and where are we at today? We're right back to it. So, are we going to go lower from there, or are we going to come back inside of this again? Right? I mean, I think it's fair to say that this high, if broken, will have some more melt up, or this low, if broken, has some gap fill potential. So where to? Well, I believe this would be the Head and Shoulders measurement, company handle measurement that's right around all-time highs, and this gap fill would be a little bit more of a risk-off tone to have a healthy. This is roughly a 5% pullback. So from this high right here, this would be about a 5% pullback if we the U.S.-China agreement gap from the Friday close to the Monday open. It was all futures on Monday morning at 3 a.m. That's what produced a 3% move and proceeded higher for the day. But this would be about a 5% pullback. Okay, so we're kind of stuck in all honesty. I thought today we had some pretty good levels line up. I was watching my charts here, all day. We some sticky levels around. This is like the 582. I was thinking we'd get to 580 today. I put in a butterfly spread. I closed out for a partial loss, but the SPY lit up around that 580 handle. It ended up not materializing, which is fine. I took a partial loss. Went out to the SPX as well. This one was stuck between a couple levels that actually looked like the SPX kind of won out today. So we had a 58.75. And this is all verified from the live session this morning, but 58.75 was the live level I was watching when we just bottomed. We went up to it. That's what the day unfolded to give us. So we kind of held the sticky level around 58.50, and we are kind of late day just melting up. This isn't a melt up. This is more of just like trying to work its way back to 58.75, which comes back into this support. So, tomorrow being Friday, does this support matter? Does it become resistance? If so, do we come back and retest the lows tomorrow? Or are we back above this? And this all of a sudden, this afternoon drama yesterday at 1 p.m. when the market dropped 1.47%, is that an inefficiency the market's going to come back and find? Okay. MRU, I did look at it when we talked about it. MRU. Which one is this one? Food retail. Was this the one we talked about? I thought there was one that's like $17 that you shared with me. Is this it? MRU? I don't think this was it. I wouldn't be that interested in buying a grocery store at all-time highs. I feel like this one's not it, Daniel. The roundtable for it should be for everyone, Lee. If you're in my Telegram channel, you're all welcome to sign up and join the roundtable on Wednesday. Yep. So here, I'll show the link right now. I mean, most of you are probably in my Telegram or in my Discord. I'll show the link both places, but if not, if you're watching this, here is my Telegram. So Chris Pulver Telegram. There's the channel. If you're here live, I'll give you a 30-minute link for my Discord. So before we're done today, that will expire. I just don't like leaving the links out there for YouTube bots and spammers and crap to get a hold of. So I just put a 30-minute live link. There we go. This is Chris Pulver Trading Discord. Discord link's good for 30 minutes. Telegram is good anytime. It's a one-to-many. So not a lot of spam in there since I'm the only one that can talk. I can't remember now. Yeah, I can't either. Okay. What else we got? Let's go tail the tape today. Markets are, basically fighting back. We started off, I'll get to that in just a moment here. Let's go heat map. Interesting. So, I mean, Mag 7 kind of clawed its way back, maybe just some forced inflows there. Tesla's up. That's not bad, 3.61% today. The Russell was down into the low 200s. IWM is trading at 204. So we did push a little bit lower towards 201 today. I just think we're in it seems like a decision zone, right? I mean, what is this market going to do? I mean, I look at this candle, and it just seems like if maybe it's a weekly candle. Yeah, maybe this is our island, right? If price can't make up its mind, we poke the highs, we're just shy of the lows, we have an inside trading candle week. Well, unfortunately, we're just gonna have to really wait and see where the market's going to go. Markets should be open tomorrow down, but they'll be closed on Monday. Market should be open tomorrow. Is there a holiday tomorrow? I don't see any holiday tomorrow. Yeah, I think Monday they're closed for Memorial Day, but not Friday. We have no major. Lost my camera. Give me a second. No major news tomorrow. Let me tighten this back up. But it is just a Friday. We'll see if there's any crazy expirations. Okay. So CAD retail sales. Yeah, that's it. So anyway, I was using this weekly candle. Tomorrow, if we don't have any direction high or direction low, we just have another inside kind of candle day, then we would have 1 week inside, right? So how long does this go? Are there going to be multiple weeks where we just keep testing these highs and lows? And this is kind of our next big level, right? I mean, either this truly breaks and goes higher to all-time highs, or this market is going to pull back and start finding some levels where the buyers are going to be interested. I mean, I think buyers are still interested. I think a healthy correction would be nice. I did find something on my scanner today, which I thought was interesting here. If I go based on, I'm sorting, I've got over 10,000 stocks that I can filter for. And I just use like the all stocks filter, and I just sorted by volume. Okay. Now, some of these with crazy high volume I've never traded before, but SQQQ is a leveraged S&P move. 54.4 million shares traded today on SQQQ. Okay. That is a single leveraged tool. Here's the daily. What is up with this price? Weird. Okay, there it is. So I'm wondering if that much volume is going into this, are we going to see that move? Right? I mean, if this goes up percentage-wise, what would that be? This should be single leveraged. So that would be up around, no, that can't be. Is this triple? Okay, this is a 3x. Okay, this is 3x. So you've got triple leverage with crazy high volume. If we have a move into this gap fill, that'd be about a 5 or 6% correction in the S&P, about a 17-18% correction in the SQQQ. So I thought that was maybe a little telling as far as where some big volume is flowing. Nvidia still has some decent longs, but I mean this is massive volume. Now I'm giving you a little sneak peek here of 10,000 plus stocks. I'm interested in, this is my get set and go. So it's kind of like a 3-part. So I mean, get ready. These are noticeable, but not really ready to trade for me. Get set is, I'm anticipating a move. I'm willing to trade it if it prices out to be something favorable, like something I like as far as the price and the asymmetry. I'd like to, I trade it one direction. I've got a good reward to risk ratio. I trade it both directions. I've got a high probability, but I'm not looking at 100 stocks here. I have 100 and I sort by volume. So just today I did this. This is real time. Basically, I've got Affirm, FCX, which is copper, CMG, which is Chipotle, not sure what that is, AVTR, not sure, KVUE, not sure, but they're primed. I take a look at them because they're on my dashboard. Walmart, Target, which is sitting at COVID lows, by the way, and then ASTS. So of 100 stocks that are in this setting of my pinch point scanner, I've got 9 that I'd be willing to take a look at and try to price them out. And then my favorite is going to be the Go. But what I want to see is, if I click on Go, I want to see at least reasonable volume. There's not much volume here. I'd want to see at least 500,000, maybe 1 million plus in volume. And I want to see prices, that I can have open interest, I can have liquidity. If I don't know the stock or have a decent volume, then, there's a lot of stocks here. But I've got 9 that are actionable. And I have 2 here, but I'm going to discount them and say they're not worthy of my trade. But I've got 9 that I'm interested in. I also shared this week in my Telegram channel. I gave a little bonus watch list in here, just with this pinch point scanner. It's right in here. So there's my watch list this week. Okay, this actually, I meant to say over 10,000 tickers. So over 10,000 tickers and symbols, including ETFs, and I found actionable trades there. So this is something I will be showcasing next week at the roundtable. This is going to be a new service and offering that I have. Everyone asks me, I get this question in my Discord, I get this question in one-on-one sessions. It's like, Chris, how do you find trades? This is stuff that I look at. I used to have to do this old school, where I have to search and find and scan and use little heat maps and filters and do my own personal screening. Well, for the last 4 or 5 months, I've been working on this to build this out the way I want, and now it's just a couple clicks of a button, and I've got actionable ideas. So pretty cool stuff. Yep, got it. Okay, so where are we at for today? S&P is clinging to some gains, 0.47%. We're around 586 on the SPY, 0.55% up. NASDAQ up a little bit higher, 0.77. Futures market today, honestly, outside of that 1 p.m. sell-off yesterday, it was actually a pretty boring day. But I say that, but it also grinded higher all day. It was very quiet last night. So kind of a lackluster day. But if you're in here grinding, there was opportunities today. Little grind off the UOP, little grind off the VWAP, little grind off the UOP. Right back to that, that's a 2, I think that's a 2x move on the VWAP, or a second band move on the VWAP. So again, if you're in the futures market grinding, I got some pretty straightforward stuff here. I was happy with my option trades this morning; they worked out pretty well. Target, I like this trade. TGT, this is one that I'm going to be taking for my pinch point. There's a variety of ways I'd like to look at this. I think retailer wise, I would like to think that Target is a lot better value than what it's showing right now. The stock has been beat up so badly that I'm just going to check the fundamentals really quickly. I'm thinking that the fair market value has to be over $100 on this thing. So we've got insider selling below estimated values. This has to be trading for should be, I was going to say 10x. So we got 10 times price to earnings. which is, I think Walmart is trading for like a 37 times earnings right now. So, I mean, Target seems pretty cheap. I've got some good upside potential on Target. So this also blends very nicely with one of my community questions came in. Let me see who that was. Let's go. Who was asking the question? So I've got Ghost in my Discord asking about, basically it was a diagonal spread. He's trading NVIDIA, bought a call, trying to sell a call against it. That's a diagonal spread. As long as you buy the longer dated call and then sell against it to lower your overall debit, that's a pretty good way to do it. Anytime I'm going out longer term, like a 6-month or 12-month leap, essentially, where I buy a long dated option, I want to sell against it. Okay, so I want to build it out and show you what this looks like on Target. I might do this trade. It's going to cost me maybe $2,000 to take the trade if I want to go out far enough, if I want towards the end of the year. But here's an example. So if I buy a call and then sell a call, what I'll end up doing is, let me see if I can change the expiration here. Yep. So if I bought the December 19th, roughly 70, if I bought like the 85, either the 70 or 75. So, $2,000 puts me at a break even of around 101. Okay. So 101 would be my break even. Now, if I'm going to sell something against this, let me see how far out I have to go. If I went out 36 days and sold the 101, okay, so I could do this for a $1.80. I could sell the 101, collect a $1.80. That technically would be an income trade where if Target goes up above 101, I get this called away. I'd pay $17.98. Okay, so 17.98 plus the 80 strike gives me a break even of 97.98. I get it called away at 101. I make $300 on this trade. Like that is an income trade over 300 or 36 days if target's greater than 101. Now the nice thing is this is what's kind of cool about building this trade out. So I'm going to look at the 80 by 101. Let me put this over here. So if I buy the 80, get rid of the puts for a second. So put. So I'd buy the 81. This would be a December expiration. And then I would sell the 101, but I'm going to change the expiration on this one. So I could sell the June 27th. Okay, so that's about 36 days. So I buy the 80, call, sell the 101, call. Okay, that's the -1, +1. I was like, why is it backwards? There we go. There's my diagonal spread. Okay, so this is what the trade looks like. The nice thing is even if target goes past my 101, I can still keep most of that profit. Okay, so there's a peak here. So generally, if I did a spread that was like the same expiration, if I did an 80 by 101, okay. So if I did a if I buy the 80, I'll just type this out. So if I buy an 80 call and I sell the 101 call, that's a 21 wide strike, right? Like a 21 wide spread. And right here, if I did that and I'm paying $17.98 for it, that means that I risk $17.98 for a reward of 21, which gives me roughly 302, right? 302 max reward. And that's if I just did same expiration spread. Same expiration spread. That's what it would look like. Okay. A diagonal spread, which means I buy the long dated call and I sell a short dated call, it looks a little bit different. So I would buy the December 80 call and I can sell the June 101 call 17.98. Okay. But because my longer dated call still has intrinsic value and extrinsic value, I can exceed that 302 max profit. Okay. So if price goes to around 101, I'm going to be up on this trade about $570, almost, 1.5 times what I can make on just a spread trade. So let's go to expiration. Let's say that by the, I don't know, let's say by the first part of June, let's go to the first Friday in June. Okay. If price on target goes all the way up past 101, I'm going to be up about $300, which I'm okay with. Okay. Now my max profit would be I've got to hold it all the way to June. If it goes past that point, I still make some more money. If we have a nice recovery on target. Okay. So I don't mind the trade. I mean, we just had earnings miss. The stock is super beat up, and I know that it's not perfect. There would be risk in the trade, but that's to me a pretty cost effective way of doing it, because if I don't make money on this trade, I can still lower my costs, lower my costs, lower my costs. MDU, okay, got it. MDU. I can still lower my cost. So if I take this trade on target and we go up in price, I'm looking at a level here that could possibly get us back to like 103. If we hit 103 and then pull back and hit 103 and pull back and we bottom out in range here, that's fine. Okay. I also I've got exposure on it already. I bought a ratio, or I sold a ratio spread rather, put spread, and I did that down to like I think a 75 or 80. Let me try that right here. So target positions. I have the 80 by 75 ratio spread. It's down a little bit of profit. I'm down $60 right now in the trade. No big deal. But I collected $1.74. Now I also said I'm willing to own the shares. If I own shares, it'd be 100 shares at 75 minus 5 minus $1.74. I would own shares 75 minus 5 minus $1.74. I'd own shares at target at $68. I think I could repair that pretty easily if I had to. Okay. All right. So anyway, let me go back to this really quickly and just talk through the diagonal spread. Here's what's nice about this. If I did the diagonal spread, all right, the diagonal spread, if price even well to expiration, if we get to June 27th, which is my short dated call that I sold, I can keep $400 versus just the spread. I can max this thing out. Let's say that we're right at the sell strike at 101. I can max that out around $575. And that's not what I planned for. That's very difficult to obviously like pin it perfectly. But if I am seeing target go up, there's going to be money to be made on that diagonal spread. If we're up in profit, let's say the target is over $100, then I take the profit. If I wanted to roll that sell side call, I can roll it. If I wanted to, let's say target hasn't gone anywhere and it's still at roughly $95. Well, once I take profit on this sell call, then I do it again and I lower my cost basis, because if I take the trade for $17.98, that would be $80 plus $17.98. My break even on the underlying diagonal spread is the break even price is $97.98. So the next time I could do it, I could sell it for, $100 strike or $90, $99 strike or $98 strike. And over the course of 30 and 60 and 90 and 120 days prior to getting out to the December expiration, I could keep selling the diagonal spread. Does that make sense? So that's what I'm considering on the trade. If I went out longer, I would try to sell against it so I can hopefully turn this into profit. Okay. The other way, which actually I think this is also fairly cost effective, which would be I'm going to take out some of the time value. I'll take out essentially like the extrinsic value here, and I just want to see what the timing looks like on the trade. So I'll go target, look at, let me clear this trade out. If I went, let's say July or August, let Let me see. It just depends on what it costs me. If I buy the 90, like that's not bad. So basically this means this. If I buy Target at 90 and I sell it at 100 and I keep the strikes at both at 85 days, this means that as far as the time goes, I'm only paying about 25 cents for the time in this trade because I'm already getting $5.23 of value. So, I mean, technically, I'm only paying about 2 cents for this trade. Now, there's risk because if price goes against me, then this is my debit that I'm risking. But if price goes up, I can see this become, 620 and 720 and 820 pretty quickly. So let me price this one out if I did a August 15th. Let me switch these up a little bit. So that's one example on the diagonal spread. I'm going to put another spread together if I did a buy call and sell call. So if I buy the 90, is that the expiration? Yes. So if I buy the 90 and I sell the 100, that's my trade. Now what I want to find out here is, let's say in the end of May. Okay, let's say the end of May. So Friday, May 30th, price is already at $100. Well, this debit spread, even though it's not at full potential, I could still be up about $150 to $200 on this trade. Like, to me, this is a bit more cost effective. Rather than shelling out, $1,800 for a diagonal spread, I can take this trade for a debit of around, it shows 683 debit here, but mine is showing less. If I buy the, is that right? Buy the 90 and sell the one, okay. Sell the 100. That's not bad. Let me see, can we get back to 105? That level's 103. We'd have to be coming after a gap fill here, but I'd be paying like pennies on the dollar. If I go 90 by 100, yeah, it's a little bit different. So right now, I'm paying about 25 to 30 cents of time premium on this trade. If price goes greater than 100, I'll still make money on the trade. If I bump it up here, now I've got $15 potential for a max risk of about 720. So I don't mind this trade. If we get back to 102, let me build this one out. So if I did the 90 by 105, 90 by 105, about a $7 debit. By the end of the month, if we're over, $100, it's like I'd have some profit to show for it. Okay. I think I'm going to take this trade. Let's see. Or how bad is Target going to get? We've got 10 minutes left. All right. I don't want to force a trade. We are oversold with divergence. I do have a ratio spread at the 80 by 75, so that one's still running. That's down here. I'll put the 80 by 75. So that trade's still on. I'm looking for price to give me a mover. Am I looking for any shorts for quantum stocks? I'm not. I just haven't been chasing them. I mean, I know some traders have posted like, "Hey, this quantum stock." I'm like, I'm just not chasing them. I mean, I think it's they're running like crazy. I think it was like Baja Pete was in the room this week and he was talking about one quantum stock. I don't remember the ticker, but it was up a ton in like just a handful of days. But I think those are pops and drops. So I just say be careful. I'm just not chasing that stuff. All right. Before we go, let's go to currency. So today we have some clustering pound and dollar and CAD on top, JPY baseline, Aussie, Euro, Swiss, and New Zealand weakest. Okay, not a ton of volatility though, 40 and 50. Nothing crazy there. Let's go heat map again. So we had 60% of stocks advancing. That was a late day charge because we started off like 65% of stocks declining originally this morning, and they have fought back for the day. But I go back to what I said in the very beginning. I think if we're watching this on a weekly time frame, this is going to be the island candle to watch, right? This is the U.S.-China trade agreement. This is the gap from last week. If we don't break above, we don't break below, we're just stuck inside this for right now. Okay. So that means, it's kind of annoying because I'm positioning for something like this where I have a 590 on the SPY, a 590 by 580. I'm still looking to see if that is going to give us a pullback by the end of the month. But next week is the end of the month. So I'm either right or I'm not. And if we have another candle that closes here, where like this is an inside candle, and then next week we have a holiday on Monday, are we actually going to go anywhere for a shortened trading week? Maybe, maybe not, right? Maybe and also after May, you get into June, it's like, okay, we wait for non-farm. Do we wait for inflation numbers again? I don't know. I mean, I think the market is due for a pullback, but what do I know? So it's just, I think right now it's like, I'll be patient. I'll sell a bunch of calls. I'll lower my cost basis. I'll prune the portfolio like I always do. Um, I would hate to see the market just go higher. I'm hoping that the market can, at least find a way to pull back a little bit to something reasonable. I think in order for the bulls to try to find a way, to go to all-time highs, I think we do have to have a pullback. I'm not saying that this is like a top, but man, if we go to this top, how is it possible at 25, 26, 27 times multiple on the S&P that we can just justify all these highs? I don't know. So I'm hoping that at least we have like a bit of no man's land. Somebody used a good analogy. I was listening to a podcast last night. They talked about this as a bungee cord. So basically, here's the bridge, right? You jump off the bridge, and the elasticity bounces the market up here. Well, what's the next thing in a bungee drop? If you do a bungee jump, you drop, the elasticity pulls you back up, and then you drop again, and it's usually less, right? And I've talked about this, like, this market may not give us anything. It might not give us a high, it may not give us a low, but somewhere in between, we're just gonna have to figure out how to survive in here. So I don't know. I'm trying to be patient. That's not easy because obviously I'm like, just give me some levels already. And meanwhile, I mean, Bitcoin broke highs yesterday, and that was kind of exciting. We're up to 63.24 on IBIT. We crossed 111K. We're at 111.2 on Bitcoin. However, I will say this just on a bar count: 1, 2, 3, 4, 5, 6, 7 candles in a row. I don't think this is the buy that I want to take. I mean, I think we're going to retrace. So I'm not going to be a sucker here and buy it. I mean, I do have shares in that were accumulating here. I bought a lot during the accumulation phase prior to the election. But I mean, I just had a new account open yesterday for a client, and I put in a position at $60. Okay, so that $60 position, I bought a $45 hedge on IBIT. This is an IBIT position. So I bought the shares at 60. I bought a put at 45 for $2.50. So I'm going to buy in at 60. I'm going to buy in at 55, and I'm going to buy in at 45 on IBIT. If it pulls back, I want to have protection on all 3 positions. So, I mean, I don't know if this is going to be a pullback to the middle, pullback to the lows, or if this is just a 7 candle move that pulls back a little bit for an accumulation and we go up and we're off to the races at 130 to 150. So time will tell. But like I said, don't be too excited about just blowing through these highs, because more than likely we're going to get a pullback. Where would that pullback be? That would be somewhere in here. Minimum would be probably 100K, and possibly pulling back a little bit deeper into the 90K. If it pulls back to range, then this obviously would be a little bit of disappointment. Dude, if we get to 80 today on the S&P, I'm going to be so mad in these last 4 minutes. There's no freaking way. I had a butterfly spread this morning. You got to be crapping me. If this thing goes to a 580, it's unbelievable. If it gets there, I'll be so mad. I closed out a butterfly spread, 27 cents. I took a loss on it at 10 cents. Um, but now I've just seen the current gamma level jump up by like 400,000 contracts. What the heck? I don't think it gets there, but I'm going to watch it. When I looked at MDU, was sort of a cup and handle on the daily. Okay. Yep. Let's take a look at that before we go. Yeah, I see that. I see that. And again, textbook cup and handle would be you got to trade the break. This could be a noisy spot. We could have a little accumulation in here. But if we break above 18, I mean 18 to 2050, it's like, I mean it's not a huge gain, but I mean that's 15%. But I think technically it looks pretty good. So either we hold this consolidation level where this is just a bit of a fake out trade. This is postured, pretty solid. I don't mind getting like if you want to test the head and shoulders, you're buying it here. If you want to confirm the head and shoulders or even the crown structure, um, it would be in here. So either the test level or the breakout level, and the target would be the highs. Yep. All right, let's stay to the close here for 3 minutes. I'm watching the SPY over here. This thing has just dumped hard the last 20 minutes. So this level here at 580, this is what I'm saying. Like I was watching this thing swell all morning. We were, up and then down. It was getting larger, up and then down. It was getting larger. And then as soon as we just drifted higher, it dropped by, I don't know, like 100,000 contracts. And now it's gone from, 800 to now 1,200. So if it doesn't get there, obviously in the next 2 minutes, I wouldn't be shocked if it gets there tomorrow. And it's just one of those things where it's like timing is everything, and the zero DT didn't quite get the job done. But that still doesn't break any major weekly structure. That is my point here. It doesn't really break anything on the weekly, right? So the weekly level I'd be watching would be closing below 57.50. If we're below 57.50, then we're eating into that U.S.-China trade agreement gap. But if we stay in between, then we're still just range bound from that candle. All right, let me see something here. I closed out that trade for a small loss. We go SPY. It's still trading for 8 or 9 cents. So I'm just curious if it like runs into that profit trap real quick and just a real shystery move. That's SPX. Here's SPY. I mean, can it drop $2.60 in the next minute? Probably not. That'd be about a 0.45% move. Doubtful. In fact, extremely doubtful, but still, whatever. It was partial loss. Still had winners on the day. Overall, happy with daily profit play. That worked out well. We had quite a few winners, quite a few trades. So we just been grinding. Butterfly was closed out at 10 cents, so that's a winner. Yeah, I mean, $140 on the day. Not bad. Okay. And it's closing bell. So we didn't get to 580, so I'm glad I bailed on that trade, else it would be a loser. SPX, we were watching for the 5800 to 5875 today, didn't get there. Or I'm sorry, the 5800 to 5780 didn't get there. Tomorrow's a new day. So do we make a run to threaten these lows? Do we hold off and just have a bunch of noise tomorrow? I don't know. We'll find out. All right. What's the look at? So we were up. Was it not up about 0.5%? How the heat map finished today? What a dump at the end of the day. Huh. So the advanced decline still did okay, 57% advancing, but we definitely had some dumps here at the final 20 minutes or so. Semiconductors took a dip towards the end pretty hard. Medical devices, UNH down. Okay. Not a lot of bright green. Palantir up 2.69%. Palo Alto up 3.16%. Crowd up 2.61. I think Crowd had earnings this week. Maybe Palo Alto did as well. I priced those out. They just didn't price out good enough for me to take the trade. I do have a trade on Baidu. I need to see if this one gets back above 86 tomorrow. And then we did get filled on Urban. Son of a biscuit, man. This thing's got to be below $71 tomorrow. You got to be kidding me, dude. All right, chart alarm set at 71 tomorrow. Small risk on Urban. I was kind of shocked that actually made the move that it did. That jumped up. I mean, 23%. What is the average expected move on this thing? It wasn't that, I can tell you that much. So URBN. This is a one-day move. The expected move was around 12.85%. Good Lord. So that was a 2 times move. Crikey. Huh. All right, well, again, timing could be everything. I might lose on the trade tomorrow, but then next week it's filling the gap. I might actually try to roll that thing out. We'll talk about that more tomorrow for newsbreakers. All right, got to do some to-dos here. Okay, any questions? MDU, let's take a look at it. Yeah, it was that cup and handle, right? I mean, I see this more of a crown structure, to be honest. With this, with this consolidation window, this swing up, a little consolidation. So either a test level here, or the safe trade is going to be a breakout above this crown line above 18, so greater than 18 with a run to 20.50 and beyond. But I mean that'd be a pretty safe target. Would be going after that trade. There's your reward, there's your risk. So about a 2-to-1 if you look at it that way, as far as like owning shares or buying the underlying. Okay, what else we have today? So SPY essentially flattened out for the day. Q's down from 0.75 and change positive to now 0.2. Dow finished very flat at 0.02. Russell finished flat. VIX, pretty indecisive. Dollar index, sideways. I mean, sideways. We have a trend line break. I'm curious if we keep hugging this trend line for a bit more of a pullback here. Oil, I am going to take a trade here. If we come back down to the lows again, I will look for another bounce on oil to go long. It may not be ready yet, but I'm going to try to get maybe some wishful thinking in here that we can buy this thing low. Nat gas, sideways. Gold, I'd like to see gold continue to head lower. Same thing here. If it doesn't break that high, I'd love to see a lower low on gold. I've got chart alarm set at my 144 moving average and 200 moving average. I will buy some GLD shares and I'll position for some GC options, which is gold futures. Silver, I'm buying shares of SLV and I'm going to level into a couple of spots here. So I had a fresh account that opened up today. I bought some shares here at market around 29.80, 29.90. And I've got a pending order down here to buy more and a pending order down here to buy more. My price target on silver is much higher. I'm looking for SLV to get up to about $43 to $44. That would be a spot price on silver would be about $48 to $50. Bitcoin, having 7 weekly candles in a row, we're probably due for a pullback. It's just a matter of how severe. Don't be surprised. This actually wouldn't be a bad thing, but if we have some efficiencies getting found in Bitcoin, that wouldn't be a bad thing. That's why I bought some puts to also protect those in case it does dump to maybe 95,000 or lower. MicroStrategy back down below 400. Coinbase continues to make some fresh highs. Ethereum, copper's still in my range. This one might be like surprisingly good. Maybe. Okay. If it stays in those 3 lines, that could be a nice little payout. Let's see, Germany, a couple days at all-time highs. The UK marching towards all-time highs. Argentina at all-time highs. China I'd like to see a dip on China. I mean, it might be more severe. I don't know. Brazil pulling back, Latin America pulling back. Mags, Nvidia earnings is probably going to be the make or break for Mags. So we are consolidating here. I'd say, again, kind of a big open space. Look at this high, look at this low. This is a daily. Put these together for one big weekly candle. It's one weekly candle. If Mags can break above, then maybe we're melting it more. But don't be terribly surprised. Look at where we're trading. This is exactly like the S&P, right? There's a high, there's a low. If we stay inside of this, there's just not much going on. We break below, we break above. There's room to run. There's room to run. So I don't know. I hate to say it, but this market without any major breakout or confirmation could be pretty boring. So just looking at some income positions would be probably wise. Apple still sideways. Amazon I'm still long. Broadcom didn't take long to get this thing back up towards all-time highs. Can thank Nancy Pelosi for that one. Google got to 176 today. That's not bad. That's a lot better than this low dump at 150. Meta, I'd love a pullback. Microsoft, I think we're creeping up towards all-time highs. Netflix, probably going to pause a little bit, I think. Nvidia, earnings at the end of the month. This will be next week. That'll be a key earnings print. Tesla, green on the day, still probably due for a bit of a pullback. Just going to keep selling some premium. Bonds, not a surprise that fresh lows on the bonds. We actually rallied today. The 2-year yield, 10-year yield's down, but again, nothing even closely resembling back to Liberation Day lows. The 20-year, which the bond market flinched at the 20-year at 5%, it screamed up here towards about 5.16. Not a peep. So we'll see. Is this going to, choke off growth? Is this going to be something that gets priced in negatively for the markets? Is this a spot for the bonds to rip and the yields to drop? I'm not sure. I would think if the bond market can go up, that we would see equities pause or drop a little bit. Okay. All right. What else? That's probably about it. Wow, that's a big change. This is the stocks above the 50-day moving average on S&P that took a big nosedive today. Stocks the 200 took a big nosedive. All right. Market breadth might be telling a different story. With this decline on the 50-day moving average and this declining back from around 55% down to 48%, is it possible that the 200 moving average is now acting as resistance for a lot of these stocks? It's possible. Just keep an eye on that. NASDAQ. Let me see if I have NASDAQ 100. So here's above the 200-day. I'm going to add NDTH. There. So now I have the 50-day and I have the 200-day. And this level, lots of lows in here that are like good buy. That's kind of nuts. That this year, the 200 moving average, we didn't have the buy signal, but we did on the 50-day. That's why I look at both of them. Try this one here. So that would be kind of my sell line and buy line. So we didn't hit it on the 200-day, but we did on the 50. So a really good timing indicator for market breadth. All right. Think that'll do it. Currency strength, pretty boring on volatility. Let's see what tomorrow brings. No major news tomorrow. Going into a holiday weekend. Maybe it's a nothing burger tomorrow. Maybe the market doesn't do much. Next week through the holiday, we have end of month on Friday, the 30th. So we'll just continue to spot check and grind. Okay. Thanks, everybody. Have a good rest of the day. I will see you tomorrow. Thanks. Bye.